Hello and welcome to Junior Achievement's virtual speaker series. What is involved in applying for a loan if our student wanted to do that once they're able to?
Okay, that's a really good question. And part of being financially literate is to understand how loans work. So in applying for a loan, there's so many different types of loans, but in general, the first thing would be you need to be organized. So the more organized your financial records are, the more there is a positive correlation to your probability of getting approved. Because if you're organized with your tax returns and you have all your information, lined up for the type of loan that you're applying for, there's a higher chance that you will be approved. So that's just, a broad picture of just loans, applying for a loan in general.
Okay, so we're talking to high school students predominantly, and is there an age limit? Do you have to be 18 to apply for a loan?
Yes, that's part of the reason why, for example, if you were applying for a car loan, they would ask for your a valid Florida driver's license, and part of the reason is to not only verify that you can drive, but also to verify that you are of a legal age to enter into a contract.
Okay, and after that age, would they need a parent to co-sign to come into the bank with them?
That's a good question. So let's say, for example, you're applying for a car loan, right? So the first thing you would do is that would be important is to get pre-approved, or that's just a word that means that you want to look at your income and then look at how much the bank or the dealership would be willing to lend you based on your income. So before you start shopping for a car, it's important to know what price range you should be looking at before you start shopping, because you may be looking at cars that you may not be able to afford at this point in time. So based on your income, you basically want to stay at below 50% debt to income, meaning your monthly payment should be under 50% of your monthly income. So if you're earning $2,000 a month, then the maximum or the highest amount of payment that you should be making would be $1,000 to make it 50, actually a little bit under 1,000 to make it under 50% debt to income. So it's just basically your payment, $1,000 divided by your income, 2,000. That's 50% debt to income. Now, if let's say, for example, you're looking at a vehicle and it's the monthly payment for that vehicle comes out to let's say 1,000, because it's got to be under 50%, right? So now you're at 50%. So that's where a co-signer or a parent can actually come in and sign the note with you, sign the loan agreement with you. So the parent can use their pay stub and their income, and what they'll do is they'll combine the parent's income plus your income, and then take the debts of the parent and that new car loan and divide it by the combined income. And as long as that is below 50%, then that would be a loan that would likely be approved. Or you can find a co-signer, and it doesn't have to be a parent. It could be anybody who earns enough income whereby they are willing to sign the note with you.
Okay, because we would have had, a lot of our students maybe 18, maybe in school, so they may only be working part-time.
Yes, so most likely they would need a co-signer.
Okay, and that co-signer is then responsible, obviously, for the loan.
Yes, they are responsible for the loan. So if if the student does not pay the loan, then it's the responsibility of the co-signer to make the payments. So it's just as if the co-signer was taking out the loan. There's no difference.
Okay. So why would a loan be declined or approved? I mean, you talked about, debt versus income. I'm sure that's a huge factor, but you did say they would need to be pre-approved. And once they're pre-approved, does that take them through the whole process?
Yes. So once they're pre-approved based on their income, then what happens is, okay, that's just based on a verbal conversation where you're saying, in this example, I'm earning $2,000 a month. And they said, oh, let's say, for example, you're purchasing a vehicle that's $25,000 for a car. Now, typically they would lend you 80% of that, the value or the purchase price of this vehicle, which would be 20,000, right? So they would take your the monthly payment on a $20,000 loan over 5 years at 4% interest is $368 a month. So they would simply, in the pre-approval process, they would just do simple arithmetic that we can all do. They just take your monthly payment, 368, divided by your income, which is 2,000, and that would come out to 18% debt to income. So that's below the 50% mark, and they would tell you you're pre-approved for this, for this car loan. Now, once you're pre-approved and you decide to proceed, then at that point, if you do proceed to actually want to get approved for the car loan, then you would actually have to apply and fill out an application. And then you would present your driver's license. You would give them your social security number, and also proof of insurance. If it's a new vehicle, you may have the name of an insurance agent that may have given you a quote. And then they would actually pull your credit report based on your social security number. So you would give them consent to actually pull your credit report. And the credit report would basically show, it's kind of like a report card of your character. So, it shows all the debts that you've had in the past, or and whether it shows whether you've paid your debts on time. So if you've made a promise, did you follow through with your promise? But then in a teenager's situation, they probably don't have much debt, and they don't have much credit history to show that they've made promises to pay and then paid. And so in that case, dealers, knowing that you are young, they may go ahead and give you a chance. And the reason is because they understand that you're just starting out. Right. And it's also a great opportunity for you to build credit at that point. So you're starting from a blank slate, which is not a bad thing. And now you're hopefully building good credit if you make your payments on time.
Great. Well, this is great information, Karliene. Thank you so much for sharing this today. And I know our students will take away some value information. So thank you very much.
You're welcome.
Thank you.